In this third part, we shall understand how journal entries are made from the transactions, how those are posted into the ledger, and how trial balance is created from the ledger accounts. Again, we shall use those two transactions which we have discussed so far and discard the other two transactions which do not require journal entries. The transactions which required journal entries were sold goods and received cash. Sold goods to a customer and received cash from a customer. In this case, we shall give the customer a name. For example, sold goods to A on 112019 and received cash from A at the end of the month. So the first entry will be A's account debit to sales account. A is the customer. Customer has received the goods. Customer is a personal account. Personal account says debit the receiver, credit the giver. Therefore, A's account should be debited. Sales is a nominal account. Nominal account rule says nominal account rule says debit all expenses and losses, credit all incomes and gains. Since sales is an income, sales account will be credited. That completes the first transaction. So the journal has a format: date, particulars, ledger folio, amount and amount. Below amount you have to write rupees and rupees or the currency whichever is relevant, and then you have to put it in a particular format. And say at the month end cash is received from the customer. So I have put 31/1/2019 cash account debit to A's account. A is the customer. So cash is a real account. Real account says debit what comes in, credit what goes out. Cash has been received, so cash has come in, so cash is debited. A is a personal account. Personal account rule says debit the receiver, credit the giver. In this case, A has given the cash. Therefore, A's account will be credited. So, these two journal entries have been done. There is a space for ledger folio in the journal, and we have not put any numbers here. Ledger folio will be relevant only when you have large number of ledger accounts. Now, let us see how posting is done from the journal into the ledger. So we have basically three accounts: A's account, sales account and cash account. So I have created three ledgers: A's account, sales account and cash account. Again, this has a particular format and you should follow that particular format. JF stands for journal folio. Now what I have done, I have put the date of the transaction. So first says A's account debit. So I have put 10,000 rupees on the debit side of A's account and I have put two sales account. It is always like that. First you decide which side of the ledger account you will post and then you give the opposite account as a reference. So A's account is debited, the opposite account is sales, two sales and A's account debit side has come. Sales account is credited, so I have put 10,000 rupees at the credit side of A's account, sales account, and I have taken A's account as a reference, that is buy A's account. 2 for the debit side, buy for the credit side. I have given it a red color so that you can identify these two entries. The next two entries I have put a green color again for the purpose of identification. In this case, cash account is debit, so therefore I have put 9,500 at the debit side of cash account, and then I have given the reference of the opposite account, that is debit side of cash account to A's account. And similarly, A's account has to be credited. I have put 9,500 to the credit side of A's account, and I have given reference to the opposite account, that is by cash account. So A's account has two entries, when goods are sold to A and when cash is received from A. Sales account has one entry because only goods have been sold to A. Cash account also has one entry, which is cash received from A. So 2 plus 2, 4 entries in the journal has been split into 3 ledger accounts. A's account has 2 entries, sales account has 1 entry, and cash account has 1 entry. Now I will see how the ledger account is balanced and how trial balance is produced. So these are our 3 accounts. Again, I have kept the colors red and green so that you can identify, and then I have put the balances. The principle of making the balances is you should put equal amount on both sides, and then whatever is the gap, that should appear as a balance. So in A's account you have 10,000 on both sides, the gap is 500 rupees, so 500 rupees is the balance. So balance is there as a carried down or CD in the credit side and brought down or BD in the debit side. It will always be like this. The balance CD and balance BD must be on the opposite side. Similarly, in case of sale, I have total 10,000 on one side, and the other side also I have put a total of 10,000. So whatever is the balance is balance CD. In case of a sell, the balance CD is 10,000 rupees. So you first total up the heavier side, the side which has a higher amount, and then you find out the balance. In this case, 10,000 rupees is on the heavier side over the credit side. So I have put 10,000 rupees first, and then same 10,000 rupees I have put on another side, and the difference is a balance. Similarly, cash, the balance is 9,500 CD and balance BD is 9,500. Cash had 9,500 on the debit side, so I put 9,500 first. Same 9,500 I put as the total on the credit side, and the difference is 9,500, which is balance CD, and that balance CD I have put into balance BD. Trial balance will be done based on balance BD, that is balance brought down. A's account has a balance BD of 500 on the debit side, so A's account I have shown 500 on the debit side in the trial balance. Sales account has a balance BD on the credit side 10,000 rupees, so I have put sales account 10,000 rupees on the credit side of the trial balance. Cash account has a balance of 9,500 rupees balance BD, and that I have put on the debit side of the trial balance. And then I have totaled both sides of the trial balance. The total has become 10,000 rupees. So this basically says or helps me to understand that all the entries have been properly posted. But if both sides of the trial balance agree, that does not mean that every accounting is perfect. There is another presentation on this at certain places, and you will look at this when you understand. Basically, errors of omission, errors of commission, errors of misposting, compensating error, etc. cannot be discovered even when trial balance agrees. or these entries may remain over there even when trial balance exists. Thanks for your attention.